Today, I'm sharing a secret technique I use to spot whether an imbalance is valid or not. And when you apply this yourself, you'll instantly see your imbalances become more accurate. But first, we need to go through exactly what that imbalance is, how you can identify it, and how you're going to be able to mark it out on your price chart. Now, as you can see, I've got some blue candles and red candles. Later on in this video, I'll go through how you can use the same indicator on TradingView to identify these imbalances with ease. But let's now go through how you can identify it by yourself. When we see the previous candle's high here, we see the push away. The next candle has the higher low. We push away again. This leaves an area of imbalance in between this area on this candle. This imbalance zone is a liquidity area left over where we're going to see blocks of orders in that imbalance, where you can look to trade to pick up those orders for another entry. Now, I'm not talking about order blocks here. I'm talking about blocks of leftover orders in this area, creating liquidity in the market. So that is exactly how you can identify and mark up an area of imbalance. And again, you can see here, price comes back into this imbalance and we have a small push away. So what makes that imbalance valid or not? Well, I'm going to share with you today 5 key factors that will help you to make your imbalances much more accurate. Let's look at key factor number 1, which is a fresh or tested zone of imbalance. So what makes it valid or invalid is we're looking for a valid zone to be a fresh zone. Let's look at this price movement. Let's go forward a candle. We have a bullish move to the upside. We have a break to the upside of this previous candle high. Push forward again. Now we create an area of imbalance. We can mark this out as an area of potential imbalance. And if we see it continue to push away, it's going to leave our fresh zone. Another candle. Now you can see that blue candle is created, showing you automatically that is an imbalance zone to look to trade from. Let's see if we continue to push away, come back to this imbalance. So the market pushes away and we bounce off that imbalance. This is a valid imbalance zone because it's a fresh zone. These are the types of imbalances you want to be only considering when you're looking to take your trades off an imbalance. Next, the type of imbalance you do not want to be trading is that tested zone of imbalance. Let's go forward again with price here to see if we can find an imbalance. So we have a nice drop to downside, looking for continuation. Now we create an area of imbalance. So we can mark out this as an imbalance zone. So we're looking for the market to run away before we see that pullback again. But straight away we get an instant pullback into that imbalance. If we now look for price to run to the downside for pullback, you'll see this becomes a tested zone and the market does not respect and hold this imbalance and we break straight through. So it's crucial that you understand whether it's a tested or a fresh zone of imbalance. This now brings us to factor number 2, the positioning of where an imbalance sits. The way we can do this is I can mark out these 2 imbalances now. We can see with these blue candles. What we're looking for is the imbalance to be with this swing. We see a break of this swing high. Okay, within this swing move up, we're looking to mark out all our imbalances. Now, what we want to look for is for an imbalance to be sitting within a discount pricing area when we're looking to buy and an area of premium when we're looking to sell. You can quite easily use a fib tool. You can mark your fib tool. You can add a 0. A 50%, 0.5 and a 1 is all you need to see exactly where that 50% lies. Any imbalance zones that sits within this premium above the 50%, we do not want to trade these zones. These will be invalid zones to trade. Any zones what sit within the bottom half of the 50 inside that area of discount, these are going to be a valid zone for you to look to trade. So the reason being is because we want to see price pulling back deeper on that swing pullback for the entry. Let's go forward again with our price to see how we react at those areas of imbalance within these 2 sections. So first we'll look at the imbalance as we come in. we start to hold at the imbalance, we wick through. You'll find out in the next factor which actually helps to make a zone valid or not. We continue forward, we fail, we close straight through, so it fails to hold. This is why you need to be looking at your zones of imbalance within that discount pricing area. Now if we continue forward, we can see the reaction we have of this valid zone of imbalance, which sits within the discount below the 50% area of the move. That's the key factor to take away, is you want to be marking all your zones and only looking to take trades off the zones within that discount pricing area. Now let's look at an example of a bearish move, marking out those bearish areas of imbalance. Again, we'll use the same fib tool to mark out the last swing to downside, and then we need to mark out all of those zones we have on the way down. We have a zone here of imbalance, all our valid zones that we can mark, another one here, and finally we have another balance at the high. You can see that all of these imbalances are indeed fresh zones. But now when we look at the premium area, which is above the 50%, it's only going to be valid looking at these higher zones. These are valid zones of imbalance. And again, this one here is going to be a valid zone of imbalance, but this one will be invalid because it's sitting inside the discount pricing. So we don't want to be looking to trade this one. Again, let's see how price reacts when we pull back towards that imbalance. So we push into the imbalance, the first candle wicks through and holds below. We hold and then we move sideways. We have a small push away, pulling back into the bullish imbalance below. And then we push through, and this has failed. The next imbalance, which is now within our premium area, within this move or this swing, these are the three imbalances you want to keep an eye on. Let's go forward with price quicker this time. We have a reaction off, a further deeper pull, and then you can see we continue to fall. So you can see that the idea of understanding the valid and not valid zones being within those zones of the premium or discount, especially when we're selling inside premium, okay, like we saw previously inside discount when buying, that is going to make your zones of imbalance much more accurate. That's when we go on to the next factor of imbalance, is for the reaction. So how do we apply that third factor to make it a valid zone of imbalance to trade from? We're looking for that reaction into the area of imbalance. But first, before we do that, we have to apply the first two factors. So this last move here to the downside, the first thing we need to look for is these areas of imbalance that sit within premium. So we can mark all your imbalances out. Using this indicator, you can see where the imbalances are. Our first imbalance would be this zone here within the premium. We can also identify it's a fresh zone of imbalance. It's not being tested yet on the way to the downside. So now when we look for price to pull back into that imbalance, we're looking for a reaction. And what you need to see is a push and a close into the imbalance, holding around the 50% or the high of the imbalance. So we move forward with these candles. So we haven't yet entered and closed into that imbalance. We've wicked again. Now we've closed into the imbalance. So we've got a reaction. We do not want to see a close through the high of the imbalance. That will not make the imbalance valid. It will invalidate the imbalance and no longer a trade. Currently, we can identify we're holding around the 50% area of this imbalance. If we hold at the 50% and we close back down, we'll see price want to run the low of this move. Again, if we mark the full zone, you can see we're sitting inside the premium. Okay, it's a fresh zone. We did test it once there. Now pushed up and closed within. Now we need to see a close back out. We have the close back out of that imbalance. Now we can look for the run for the low. Let's go forward with this price and see this imbalance is valid, and we see the reaction and we run through. Now you've seen that reaction that you want to be seeing when trading off the imbalance zone. Let's now look at the reaction that you do not want to see to make it an invalid zone. Now let's apply the previous factors first. Let's look at this swing move to the downside. We only want to be marking out our imbalances inside the area of premium. This area here is a valid zone of imbalance. We also want to make sure that it is a valid zone. It's not a tested zone. It is a fresh zone. We can see this is a fresh zone. So it's a good zone to look for price to come back into. If we move price back into this zone, and we're coming back towards the zone now, we want to see a close within. So there's our close within the zone. Now we need to see a reaction out of the zone. We want to see that expansion dropping back down to see the sell to run for this low once more. Okay, we don't get an expansion away. It's small individual candle. Now we've had a bullish expansion back into this imbalance. We're not seeing that expansion move to the downside. Like we saw in the previous move, we continue to close up and now we've invalidated this imbalance. So we don't want to see a close through the high. This now invalidates it. If we have just a wick through the high, this would still be a valid zone. So that's when we're looking for that imbalance zone to be valid or invalid, when we're looking for the reaction at the zone. This brings me on to factor number 4. How to find a valid zone of imbalance is to use a confluence with your imbalance. Now, one way we can use that is previous structure areas of support or resistance. So we have a previous high here in the market we can mark off as a potential structure high where we look for a break of structure. We're then going to use that as a confluence as an area of potential support. So we're looking for an imbalance to show you the break of structures. We have an imbalance candle breaking through the area of previous structure. So this previous area of resistance, we're now looking to act as support. If we go forward, we can now see the full swing move from this low to this high. Our valid area of imbalance is going to be where we see price sitting within this area of discount pricing. And then we also have an invalid zone here previously tested. So we have a fresh zone and a tested zone. We would not use a tested zone. We'd only look to trade off the fresh zone. So with an added confluence now of the previous structure break, we can look for price to come back into this imbalance, give us that reaction, with the reaction out being an expansion move to the upside, testing this previous area of structure. That would give us an entry to then look to run a previous swing high. We go forward here with price. We can see we come back in, hold, and we have the expansion back to the upside. We retest the previous structure. We come into the area of imbalance. We have the expansion to the upside. We look for price to run towards that high. As we can see, price starts to run towards the actual high. So that is the 4th factor that you can use to make your imbalances that much more accurate. So that 5th and final factor to make sure you're trading off a valid imbalance zone is to look for only trading an imbalance after a break of structure. First, we'll go through when you should not be trading the imbalance makes it invalid, and then we'll look afterwards how using the breaker structure will create that valid zone to trade from. So if we move forward here with current price on the chart, we can see that the market creates a break of structure to the upside. Now we have a tested zone of imbalance there. We cannot trade this imbalance. We've just pushed down and we've created this bearish imbalance. Now, this is not a valid zone to trade. Why? Because we haven't yet seen the break of structure. We need to see that break of structure first to trade that imbalance. You can see we've come back into the imbalance already. We start to push out with that expansion, but straight away we see the imbalance has failed. So we don't want to look to trade off an imbalance without that valid break of structure. So there's an example of when not to trade the imbalance, when it's not valid. Let's look at when it's going to be valid using the breaker structure to your advantage. So again, let's now look at where we are in the move. We've created this move to downside. We have a current previous swing high up here. we need to see this broken for a move. So if we go forward with price, we see the move to the upside. We now have a valid break of structure. This makes these zones here tradable because we have a valid break of structure. So we have a zone here we can mark out, and we have a zone here we can mark out. Now let's go forward and see where the swing ends. So at this point, is this a tradable zone? Let's mark off our swing, move to the upside. Are we inside discount pricing? No, we're not. So it's not valid. This one is valid because we're inside that discount pricing. It's also valid because it's a fresh zone. And we're also going to have here at the same time a previous break of structure. So we have a break of structure to the upside, making this zone a valid zone to trade. This zone is not valid. So we're looking for any pullbacks into this imbalance, a confluence of adding this break of structure. And we also have even this break of structure here level as well. We go forward with price and we see how we come into it. So we react off that area. Okay, we retest the second break of structure, this smaller break of structure. We test it as a previous resistance becomes support, and we hold at this valid imbalance zone, and eventually we run and break structure once again. So combining all of these 5 factors into your trading of imbalance zone is going to instantly make your imbalance more accurate. Now, like I said early on in this video, I'm going to show you exactly which indicator I'm using to demonstrate to me these imbalances without having to watch them on my charts. The indicator you want to use is the FVG imbalance zones at JP7FX. Apply that. I'll show you even my settings that I've used into inputs. Okay, I've just got a color setting there. These are all marked, and that is it. I don't have anything on this one or this one. I don't like to have any levels. I just want to see the candle to show me the valid zones. So go away, back test this, apply this into your own imbalance trading strategy. And if you want to learn more on the use of imbalances, make sure you watch the next video coming up.